in a very geopolitical, unstable world, in the market where there's uncertainty with what next the US can do with its currency, it's important that you look at alternatives. And it comes as no surprise that China is probably focusing on gold. And for those who are not aware, especially with the Indians, there was a time where the gold standard actually defined the reserve. What's the reserve, quote-unquote, currency for the whole world until Richard Nixon had other plans.
Special coverage of the Deutsche GOLDMESSE is brought to you by First Majestic Silver Corp, listed on the NYSE and the TSX under the ticker AG. There's no substitute for silver. Hello and welcome back to Soar Financial, here from the floor of the Deutsche GOLDMESSE, the German gold show in Frankfurt, Germany. My name is Kai Hoffmann. I'm the @JR mining guy over on X, of course, your host of this channel, and I'm looking forward to welcoming Dr. Kwasi Ampofo, Head of Metals and Mining over at BloombergNEF. Kwasi, thank you so much for joining us in Frankfurt.
Thanks so much, Kai, for having me.
Yeah, absolutely. You're critical or new energy metals expert, actually. Like, you don't really fit into the Deutsche GOLDMESSE scene.
No.
But I'm so glad you're here, because we're trying to paint a holistic picture. What is going on in the world of commodities in general? Like, we're pigeonholing ourselves always a bit by calling it the German Gold Show, but we're trying to give people a good overview of what is happening. So I'm really appreciative that you're here and trying to educate a little bit. Your presentation titled Critical Minerals, or Certainty in an Uncertain Time. Perfect timing. Yeah. Like, the world is really buzzing about critical minerals. Give us an overview first. What do you regard as critical minerals? Let's set the scene, and then we'll dive into some of the geopolitics, supply and demand of those.
Yeah, I think that's great. And the reason why, obviously, some metals are critical is just, for us, criticality really has to do with, can we do without it? And I think there are two fundamental industries or sectors that actually have earned the merits to be critical to civilization, to everyday life. It's agriculture and raw materials, in other words, mining. So for us, when we talk about critical, it's essentially, can we do everyday life without these things? And look, you look around here, pretty much if it's not this table where we either use an aluminum, or if it's not this laptop where there are probably some few stripes of gold in there, or if it's not in these headphones where there's some specialty steel materials in there. So you look at all this and you realize that without these metals, you and I will probably find it difficult to communicate. So it's critical because it plays a critical role in everyday lives of people.
Really interesting follow-up question I just wrote down as well. Is gold critical?
It's actually very, if not the most critical, right? Because why is gold so unique, right? So let's put the central bank. It's unique because it's probably the only metal that if you left it on this table and you and I took a walk into the next 500 years and came back 500 years later, it would still be the same way it is, right? It's a good preservation of value physically, but then also financially, right? So it conducts, and it never rusts, right? It never loses value, physical value. So in high value, ideally, you have metals like copper in mass product, but then in high value products where conductivity matters, in terms of switchboards, in terms of semiconductor, in terms of those high value industries and sectors. If you're looking for a conductive material, gold plays a very key role in there.
So how do governments then define critical? Because my understanding is they define it a little different than you, because gold, for example, is not on any of the critical minerals lists.
Precisely. So then you understand, you need to first unpack what role governments play. And look, just to dial that back, what is critical for you in your household is different from what is critical for me. If you take a country like the United States, they've actually legislated what a critical mineral is. And there's actually a list that comes out every now and then, whether by the Department of Defense or whether by the DOE, as to what is critical. So for the US, I think the legal definition, one, that metal needs to have economic value to the United States. Two, it's critical if we are not able to supply it and we depend on a third state or we depend on an outside country. And then three, it's like it essentially has to have, if it's not economic, it has to have sort of a security value to us as a country, right? So those are written down in stone as to what makes a commodity critical. So the mere fact that demand, for example, for copper will grow doesn't necessarily make it critical for the United States, right? Because maybe they've got an ally that can supply it, or it has no value to their security industry. Whereas if it came to Africa, it's not about demand. An African country like Congo couldn't care less what copper does to its economy. But then if it's able to sell and optimize that raw material and create value for its people, that is critical for the DRC. If you go to South Africa, their economy is hinged on coal production, right? Because it powers their homes and it gives them export revenue as well. So for such a country, when it's considering what is critical, obviously a mineral like coal will play a key role in there, right? So I think it really varies on what the priority of that government is. If it's security, obviously that will be critical. If it's about economic value, that will be critical. If it's about ensuring demand is met, that would also be critical.
I'll come back to the main, like, let's call them the base metals almost, but I want to stay on gold. Just one more follow-up question, if you allow, Kwasi. China is restricting exports of gold, of precious metals in general, so you can't get any Chinese gold. The U.S., not so much. Like, it's freely exporting other countries as well. Do you see that changing at some point? Because you said, like, it might be of national interest or national security interest, and Donald Trump said he who controls the gold controls the world, more or less.
Yep.
Do you see that role of gold changing?
Yeah, so there's a role of gold that we've actually not spoken about, right? As a store of value.
Yeah.
That's a very important asset class, right? So beyond just its industrial use and its importance to defense and technology, it's also, I would say, loosely speaking, the strength of your economy has a direct correlation with how much gold your central bank has in its vaults, right? And so it's not just an industrial critical raw material, it's also a financial raw material. So I think, it's important if governments obviously want to protect their economies, wants to increase their store of value, wants to build a resilient economy that can actually withstand currency shocks or, stock shocks or other asset class shocks. It's important that government prioritizes their ability to build their gold reserves. I mean, that's more central bank than the commodities expert, but then at least I know from 101 economics that it's important that every country needs to prioritize gold.
Are they trying to protect their economy or more their monetary system? Or in the case of the U.S., the role of the U.S. dollar as a reserve currency?
Yeah, so it goes hand in hand, right? If you either hold U.S. dollars in your central bank reserves, or you either hold gold, you can hold both, right? And I think it's important in a very geopolitical, unstable world, in the market where there's uncertainty with what next the U.S. can do with its currency, it's important that you look at alternatives. And it comes as no surprise that China is probably focusing on gold. And for those who are not aware, especially with the audience, there was a time where the gold standard actually defined the reserve. What's the reserve, quote unquote, currency for the whole world until Richard Nixon had other plans. And so I think if you have the option of holding the US dollar in your reserve, and then the gold as well. I think given, like I said, the market uncertainty now, the option for a country like China, it's quite clear that gold seems more like a reasonable alternative compared to US dollars.
No, it makes a lot of sense, Kwasi. Thanks for jumping down that rabbit hole with me. Let's come back to the critical minerals, how I would define them, like the rare earths, the copper of this world. Critical minerals have been in the headlines, the Financial Times, everybody's been writing about them. You, of course, been analyzing them. The Ukraine mineral deal was a big topic. Now the U.S. and the Congo signed a deal to provide security in exchange for access to resources as well. The importance of critical minerals has dramatically increased. In your own words, like, how would you describe those deals? Like, what's the significance here?
Yeah, I think you need to look into history to really come to what is happening or what's going to happen in the future, right? First, you look at the U.S. has always considered energy security as national security. And based on that, you remember when the world came out of the Arab oil embargo, the U.S. decided to be a little bit more strategic with its access to oil, because once again, energy security is national security, and that was oil. So we've talked about the fact that batteries are going to replace what oil does for cars,
Yeah.
and solar and wind are going to replace what oil does for energy, right? So increasingly, these technologies are also going to become energy technologies. And go back to my premise: energy security is national security. What are the materials, or what is needed to develop these technologies? Raw materials, right? So now I'm going to add a new term for the audience, that mineral security is national security, right? So I think it's that premise is based on that premise that I think the U.S. is looking to secure its share of those raw materials in order to provide energy to its people, and through that they'll provide security to its people. So it comes as no surprise. It's simply because raw materials has replaced what oil used to do for energy security.
Who's active in the markets right now? We always talk about the US. Like, it's the most dominant player, obviously. But who else is playing that game? Oh, China, obviously.
Yeah, ironically, the U.S. is actually not the biggest in the game.
Oh,
It's-
okay.
It's China.
Yeah.
Yeah, so China is
Like,
yeah,
yeah.
50% of most of the market. And then in most instances, from a demand perspective, the EU, then you have the US. From a supply perspective, it varies across commodities, right? You're talking about copper, then you start looking at Chile, and then obviously Peru and DRC and Zambia, somewhere there. You start talking about the platinum group metals, and obviously you're looking at the South Africa, Zimbabwe, Russia story. You're looking at gold, and obviously it's an entirely whole new sort of lead player in the game from a supply perspective, right? Cobalt is obviously DRC, then you see Indonesia playing a role in nickel. So it really varies. Demand, it's obviously China, Europe, and the US. But supplied, it's still an open race, and depending on who produces the most, gets to call the shots.
It seems like the US is the most aggressive in securing that access to the resources. Like, what about the EU, for example? Like, what are they doing?
Yes, I think the commodities market is it's a very diverse one, right? And sometimes I think we fall in that rabbit hole of thinking that if you have the resources within your borders, you essentially own it. But that's not actually the truth, right? Because if you look at, let's take a commodity like copper. Obviously, Latin America would be the leading region that produces it. But then at the same time, if you look at the people that trade these commodities, they are based in Switzerland. They're Swiss companies or Swiss domiciled companies.
Trafigura, Glencore.
Exactly, the Glencores and the usual. If you look at where people go to raise capital to develop these mines, they are based in London or Toronto.
Yeah.
But the mines are not there, right? So I think, yes, the US is aggressive from a government perspective, but there are also some quiet advancements being made in Europe in terms of finance, in terms of trade, in terms of regulating the institution, and then in terms of raising capital for early stage exploration and discovery. So I think I wouldn't rule out Europe simply because obviously its government mandate is less aggressive as the US. I think they're playing a very important and aggressive role in their own way as well.
No, absolutely. It's interesting and fascinating. We're getting a lot of government mandates in terms of EVs, electric vehicles, or in the case of the EU, said, hey, we're banning internal combustion engines by 2035. I believe they softened that stance now. Just from your personal perspective, when you heard, okay, the EU's banning the sale of internal combustion engines, did you say, well, yeah, okay, try again? Or what was your initial gut reaction to that?
No, I'm quite indifferent because data. I mean, we have the history of data to see that if you look at China, think about 4 years ago, the Chinese government reduced its support, subsidy support for electric vehicles, and there were quite a number of analysts who thought that would be the end of the EV market in China. But guess what? It actually grew faster. It actually kept growing faster in some instances or some use cases than others, right? I think the conclusion I've come to is that, yes, government actually plays a key role in the early stage of every innovation. Like you look at the technologies we have in communications, they were actually government projects way back. And then now they've become mainstream. So there's a time where some of these technologies and innovations are now so commercial that they don't need government interventions anymore. And I think that's where we get into with the EV market, where there's going to be a time, Kyle, where you can walk into a showroom and you can get a next generation electric vehicle half the price of what you get an internal combustion engine. At that point, it's not really about what government is saying in 2035 or what subsidy they are providing. The market itself will be your tailwind.
Since we're coming from the critical mineral side or from the resource side in general, Kwasi, I should have been more specific with the question, but like, is it even feasible? Based just looking at the raw data of raw materials being available, and you mentioned copper, for example, is it even feasible to achieve those goals? Did you have an initial gut reaction there?
Yeah, so it was going to be hard. And it was going to be hard in the sense that, let's throw some numbers there. Like every year we're looking at the amount of investments going into the renewable energy technology, the whole ecosystem, including the supply chain, right? Year on year, we've seen billions being poured into the demand side, the electric vehicles, the batteries, the EVs, and all that from government and the private sector. We look at the same data for raw materials, and it's in some instances like 1/10 or in some instances 100th the amount. So it was never going to be a feasible objective if you don't take a holistic approach to addressing the bottlenecks that would prevent government from reaching that target. And I always say this, I gave a formula on stage today that governments actually think that lack of mining investment is a mining industry's problem. Okay, we're in Frankfurt. Let's look at a hypothetical scenario. Frankfurt local government probably decides that by 2030 they will buy 1,000 EVs, or penetration of electric vehicles will be 50%. At that time they made that mandate, EVs were probably, let's say, $20,000. Mind you, the most expensive component of an electric vehicle is a battery. The most expensive component of a battery is metals. So metals is actually collectively is the most expensive purchase every electric vehicle producer would make. Okay, so at 20,000, if prices of metals it's like 30-40% of the total cost of the car, and you don't mine enough, you create a deficit. If you create a deficit, I know what's happened in the metals industry, prices go high. So at prices going double what it is in 3-4 years, what you means is that 50% of 50% of the cost of the electric vehicle, you're looking at about 25% more price hack for these EVs. You're not going to reach your 1,000 mandate because the prices have gone higher and people would have to reassess their budgets, right? So I think mining problem is not just the miners' problem. Governments have a role to play to meet their targets, whether 2030 or 2035. They have a role to play by ensuring that these markets do not tip into a deficit and cause an inflation of these technologies. And I think that's the reason why when I looked at this target and looked at the investment numbers BloombergNEF publishes, I always knew that it's going to be it will take a hard intervention to actually make that a reality.
Yeah, it's really interesting. Like from a personal experience, back in August 2023, the German government sent an envoy to Canada, for example, primarily to secure natural gas or access to gas, but then also to look at other metals. Stellantis and Volkswagen I think Volkswagen was part of that delegation as well. And funny enough, like 2 weeks later, I spoke with a German council who's based in Vancouver. He said, Kai, I want to see resource projects. So the political side got way more active. There's somebody lit a fire under their bum just to really get active, right? My point, though, is, and that's why I brought up Volkswagen, is that the private sector is starting to get involved, incentivized, or not necessarily incentivized, but supported by the governments because they were part of that envoy. Like, what role does the private sector play in that role? And how can the government facilitate the private sector getting access?
Yeah, so I think I always say this, that government do not buy metals unless it's for defense or stockpiling.
No.
That's the only time governments actually go to the market to buy metals. What they do is they support they provide the right policies for private sector. It's a Volkswagen that actually go into the mines to buy these metals. It's the BMWs, it's the Toyotas that actually go in there to buy them. So government's role, it's pretty obvious that their role is not necessarily to buy a market, it's to create a market for private sector to actually create an enabling. Should I pause so that when they finish this?
Yeah.
I don't think he gets it.
It's just very loud. Is that loud?
Oh,
Like, yeah.
yeah, I think, can you re-ask that question?
Yeah. So Kwasi, from personal experience, I've seen the German government send an envoy to Canada, for example, back in August 2023. Primary objective obviously was to get access to the natural gas, but there was a part of the envoy, like Volkswagen was part of that came out and wanted access or talked to the government about access securing raw materials. And I think Volkswagen later on invested into Patriot battery metals to get access to their lithium, right? Also, the German council based in Vancouver reached out to me and we spoke. He was like, "Kai, I want access to projects. Show me something that I can show in Berlin." How can the government sort of facilitate private sector investments better in that case? And
Yeah.
what's the role of private sector in all of this?
Yeah, great. And look, I think government do not actually buy metals. That's an established fact, except for their stockpiles and to a large extent events, right? Even that, they still rely on the private sector to make it happen. So I think it's important for government to understand its role, that it does not buy metals. And that's why it's very difficult for them to actually have a direct influence in prices, because they don't have the purchasing power to actually buy these metals. However, what they can do is they can provide the financing to support the private sector to be able to build these projects, which would ultimately create, two, they can create a market through mandates. And you talked about EV mandates by 2035. Creating such a mandate obviously gives certainty to the industry that between now and 2035, there's a market for you to produce lithium into, right? So one, direct investment. Two, uses their mandate to incentivize demand. Three, also policy certainty, Kai. Like, if you're in an industry where every 4-year cycle, the government changes its mandate on what it thinks would be the dominant technology over the next 20 years, it becomes very difficult. No mining board makes decisions on a 4-year cycle. It's practically impossible. No investor would put money into a mine where decisions are made on a 4-year cycle. So the third thing governments can do is providing that policy certainty, right? It doesn't matter the speed. It's actually the more important thing is the highway. If government can actually commit to a specific highway, I mean, one administration can decide to move very fast, another can decide to, but then all the private sector I want to see is that we are on highway A going to point B. Right, so yeah, three things: direct investments in projects, using policy mandate to incentivize and create demand, and then three, policy certainty to the mining market that we are ready.
Well, I haven't seen a lot of financings lately into the miners by the private sector, meaning like Stellantis invested into Los Azules. I think it was a McEwen copper company. So I haven't seen much lately. What's the activity right now in that sort of segment?
Yeah, so it comes down to point three I just made. Like, the policy certainty is not there. And that is also affecting the second point, the demand mandate, right? If the EU, for example, walking back on its 2035 target, if you're Stellantis, like, would you sacrifice your margins to invest in a technology where even government cannot make up its mind on it for the next 10 years, right? So I think it's important for them to see that the demand signals are permanent, then they will go back into upstream investment. Then it's also important for them to have that policy certainty. The government will walk their talk in the long term with them, because in the end, why invest in a mine that would probably exist over the next 100 years, only to realize 4 years down the line that a government has walked away and left you hanging alone, right? So yeah, they want to see that, and I think we'll see activity in the market again.
Yeah, and it makes a lot of sense. You published the Transition Metals Outlook. It's sort of a longer-term outlook as well. What are some of the key trends that you're observing right now, Kwasi?
Yeah, so I think the long-term trends in terms of the market fundamentals from a demand perspective is good. The supply is constrained and dependent.
Are we talking certain commodities?
Yes, exactly. Supply is constrained in certain. Even for demand, pretty much every metal will grow in demand. Just as some will grow 5 times what it is last year, some will grow 2 times. But then there's actually no metal we looked at where there was a decline in demand. The problem is with supply.
No.
Okay. So supply is constrained. At the moment, cobalt less of a problem, obviously because of the significant capacity addition we saw in Congo. Nickel in the medium term less of a problem because of the significant capacity addition we saw in Indonesia, and then some other metals as well. But then overall, the long term prospect for demand is high, but supply we can't say same for, right? So what is needed? I think the three things we came down to is that one, we need quite significant amount of investments in the upstream mining alone. Just to meet this energy transition demand, companies need to invest about 1.6 trillion between now and 2050. It's quite significant.
That's
Like
an insane number.
A major economy's GDP. And I think this morning you talked about the numbers we've seen on the TSX, and it's nowhere close to that.
No.
Right. And I think it's important, according to our report, that governments, private sector deploy capital to build projects, or else we might as well just forget about this energy transition, right? And two, it's important that policy incentivizes supply. Okay. No, like I know, telling the audience that I think the biggest thing mining capital fear is uncertainty and volatility. Ironically, for tech investors, if you told them, oh, this project has a 0.1 probability, they will tell you that's exactly what I want. Sign me up, right? Or we don't even have a product yet. Precisely, that's what I tell that to a mining investor.
Yeah.
That, oh, I have a 0.1 probability I'll succeed. And now they walk you out of the door if they don't call the police, right? So it's a very different risk appetite in mining, right? And for us to be able to de-risk that industry, policy has a role to play in there, as always. Okay, if you take an industry like defense, because it's so critical, the normal laws of economics does not apply in order for government to support them or in order for the private sector to support them. It's just because you know that you have a guarantee in government support. I think it's important that government and policy needs to provide that certainty, and that certainty can come from certainty of tenure. That certainty can come in the form of direct incentives, fiscal incentives to support both early stage juniors and then the majors as well, right?
Yeah.
And then the third thing is that it's important that there's a whole generation that actually looks at mining different from the way you and I look at it. And you cannot blame them because mining has a history, right? And so it's important that miners look at the future from a totally different lens. Environmentally, socially, and good governance, right? And we focus on the environmental there. That if you take Chile as an example, and you expanded existing lithium and copper mines in Chile, even by a kilometer, you start looking at some really sensitive biodiversity losses, right? Yeah. And it's important that if we are saying that demand is going to grow and supply has to grow, it's important we do it right, protect the environment, just because it's the right thing to do, but more importantly, just so the next generation look in mining and they see an industry that actually contribute positively to society.
Do you think we're actually bad at communicating that? Meaning, like because I actually think, and maybe I'm a bit naive, quite honestly, Kwasi, that we're actually doing a great job on all those fronts. We're just not communicating it. We are in an industry that is not sustainable. Let's be honest. Like, we take something out of the ground and rocks don't grow back. I've yet to see that. Yeah. Right? But on the terms of social, even governance, like I think mining companies, and again, I'm a bit naive. I'm not talking about the private companies that are dredging the Amazon or anything. I'm really talking about publicly listed companies that are under the scrutiny of certain supervisory bodies. Do we just do a piss poor job communicating that?
Yeah, so I think there's a part of it which is obviously communication. Because I still remember, and when I transitioned from the mining industry into the finance world, and I saw a company put out its first water report, and the press and palm that came with it, I'm like, goodness God, the mining industry has been doing this for 20 years now.
Yeah, exactly.
And so there's a bit of it which is communication.
Yeah.
But then the thing is that it takes a village to shape narratives, right? So if you have 9 companies doing the right thing and one company that's the opposite, it becomes an industry problem, not a stock market, not a single mines problem, not a single equity problem, not a single commodity problem. Everyone gets brushed, right? And that's important. And for us in the report, we talk about standards. There was a time, look at BRICS. I'm not sure if you remember the BRICS scandal, but then what government did is that, yes, BRICS was just one example out of thousands and thousands of companies that have listed on the TSS and other exchanges and raised capital.
So you were saying about BRICS, Kwasi.
So BRICS, obviously, it was one company out of thousands and thousands of companies that have actually been able to raise capital on the stock market. But guess what? Everybody looked at mining from the BRICS lens. So government realized that they needed to act. Industry bodies realized they needed to act. So then they created standards. And I think that's the power. We talk about standards in the report a lot, that if only half of us are actually doing the right thing, it doesn't matter what the other half do. It would affect all of us. So if we all agree that the bad nuts needs to stop, we need to adopt a minimum level of standards, and all of us need to abide by it. And that's how I think the industry can actually shape that. So yeah, to answer your question, there's a bit of it that is communications, but then also there's a bit of it where all companies need to understand that if one fall, we all fall.
It was a bit funny. It's like when I told my friends first I'm in mining, they thought I was the guy with the AK-47 sitting on the hill, like in Blood Diamond. That's what their image of me was.
Yeah.
Right? It's completely different than what we're doing here.
And the airline industry used to have that same problem, right? Travel, obviously. So then they realized that we all have to follow the same standard. It doesn't matter whether you are in a remote village in Kolwezi operating an airport, you have to be under the International Aviation Authority. Like, there are certain minimum standards that you need to meet in order for you to qualify, being called to qualify yourself as an airport or an airline, right? And they managed to address the challenges. So it didn't matter whether you were a BA or an American airline, and you did the right thing. One incident from an obscure airline affects all of you.
Absolutely. Kwasi, what's the most critical mineral?
I want to sound like a parent. Sorry. I want to sound like a parent here where I love all my kids equally.
Oh, yeah. We all do, right?
Of course, don't we? But then look, I mean, critical, it goes back to the definition as to which commodity will play the biggest role in pretty much everything, whether it's population growth, civilization, energy transition, or even everyday energy. And I think the most important one is obviously copper, for a lot of reasons, right? Talk about the grid, you need copper to build the cables. Talk about wind turbines, you need copper to build the turbines, right? Your car, you need copper to conduct the electricity as well as the panels. Talk of your children's toys, you need copper to be able to produce them, right? So I think copper plays such an important critical role. It comes as no surprise that the economists choose to call it Dr. Copper. If copper consumption grows, that means it's a sign of a healthy global economy, right? So if you ask me to pick my favorite kid, even though I will first of all start by saying I love all my kids.
Like we're just amongst each other. I won't tell your kids.
Thankfully, I have none. But yeah, I'll say copper.
Fantastic. Kwasi, very last question, sort of a bit of a summary question you just presented as well. What is like one of the takeaways that you wanted the audience to walk away with from your presentation?
I think the fact that historically investors have been good by just looking at supply. So what mattered to investors is look at a project and then look at where it sits on the cost curve, look at whether it's in a stable jurisdiction, look at whether it's a tier one, and you can go and make a decision or a return on your investment without even understanding the market they operate in. Sadly, those good days are harder to actually come across, simply because we're in a transition phase for most of these commodities, okay? And what happens in the transition phase is that demand is not certain. When I joined BNF 6 years ago, and we put out our first forecast on how much cobalt the industry will need, according to our analysis, the battery industry or the EV industry would have needed 300,000 tons of cobalt by 2030. Did the same model 5 years later, it was 150. And the simple reasons was that auto companies were switching to batteries that do not use cobalt. So if you had increased your exposure in cobalt production, hoping that the bull would persist over an extended period of time, everything has changed. And it was not the fault of supply. It's just demand evolving in a transition phase, right? So if there's one single thing I think I would say our audience should focus on, is that it's important to understand the supply as much as the demand. It's the yin yang, right? It's two sides of the same coin. And that's the only way you can actually capitalize on this transition and obviously maximize your returns.
Fantastic. Kwasi, thank you so much for coming out. Where can we follow your work?
Yeah, I mean, I'm on Twitter. Obviously, KD Ampofo, which is my surname, Ampofo. And then I'm on LinkedIn as well, Kwasi Ampofo, KWASI, and then Ampofo, Ampofo. And I'm also on all the BloombergNEF channels. Reach out, go to our contacts, send an email, and we are always happy to provide support and be your energy transition partner.
Kwasi, thank you so much. Really appreciate it. Thanks so much for coming out.
So it's
tremendous value in your information. Thank you so much for sharing it with us.
I appreciate that. Thank you.
Everybody else, thank you so much for tuning in to Soar Financially here from the floor of the Deutsche Goldmesse in Frankfurt. Really appreciate you tuning in. Don't forget to hit that like and subscribe button. Helps us out tremendously, and it's a free way to support our channel. Thank you so much. We'll be back with lots more here from Frankfurt.